Hello, everyone. How's everyone doing? High old silver. Great call by Steve up here. So to start scaling into the short gold silver ratio, big move, nice failure. Nice call, Steve Volke. Everyone doing okay? Hi, Forex Scale. I have a little company business to take care of before we get to the markets. Anyone know what it is? Happy birthday to you. Happy birthday to you. Happy birthday, dear Stelios, my trading warrior brother. Happy birthday to you. Hope
Thank you.
Hope it's your best year, my friend, in every way, in all ways.
Thank you very much, Coach. Thank you.
Okay, you young buck. So I hope it's a great year, man, and really glad that our paths crossed. So happy birthday, buddy.
Same here. Thank you, man.
All right, man. So wow, medals, huh? On your birthday. What a birthday gift for you, huh?
Yeah.
We all know. We all know Stel's a super silver bull, and the trading gods are also wishing Stel a happy birthday with silver way outperforming gold on this move. Tremendous move. I don't know what's going to stop it, except, maybe a little gravity. Gold acting great too, and yields keep falling. So, I got the DSI, and I think gold was 98 and bonds are 98, and they keep on chugging. So one thing I am a little surprised with, and doesn't mean that it can't, but look, it's trying. But so far, the US dollar yen, with what's happening in metals and yields, not a lot, but still, what, about 40 pips, 37 pips off the low of the move, and usually it leads it. So thinking that if the yen could get back through this 106.20, we have something. S&P's faded from being stronger. So I think we're just back to a little bit of what the Doug Casey used to call crisis investing, where people buy hedges against a crisis. And it's starting to look like that's starting to happen here with what's happening with trade and the yuan. And one thing I wanted to show on the yuan before I pass it back is the yuan doesn't look done yet. So when I look at say a 1 hour chart, we have one, we have two, a little divergence here. It looks like the yuan could make a move up to maybe 7.25 or so. So this is the linchpin for everything right now. If they could generate a decline, that would take the edge off all the fear that we have going on here today. And my main objective today was to sing happy birthday to Stelios every once in a while. For example, I'm underwater on a gold short that I took at the 50% level, and I just tried to buy the yen. So far, not much working for me. And this is why I tried the gold at the 50% on the monthly and, stopped for a minute. So the next fib on this is all the way at 1586. I know there were some guys that had counts at 1505 for a possible high. So I certainly can't chase the gold up here. And we'll see what happens today. For the last few weeks, I've been seeing things pretty clearly. And then you have a day like this. And instead of trying to press, I'm just going to try and see if I could survive what I have on and let the markets clear up and reset for me. And what I've learned over the years is not to try to press things when some of the things I'm seeing are not happening, and attempts that I'm trying. Instead of trying to get even or averaging out, I'll just sit back, leave my stops in, and see what's happening. So the great thing about ForexAnalytix is I don't have to know every day, because I have the best team on the net to rely on. And I really suggest you guys learn to put these guys on your side of the ball as football season's approaching. You want to have next man up and very strong team. So consider joining, at least taking the trial. And don't forget to, go see our sponsor, especially if you're not completely satisfied with your broker, so that you could get paid for what you do every day anyway, trade. And with that being said, Blake, how are you today? Maybe you have some clarity with what's happening here in the markets. What do you think? What are you thinking in here? Maybe Blake's not ready. Because this is...
Sorry, I was just trying to find the unmute button. Bonds, 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 bonds,
yeah.
bonds, more
gold.
bonds.
Yeah.
Bonds, gold, bonds.
Mm-hmm.
Yeah, that's what's going on. Go take a look at the bond. Well, here, I'll just
yeah, show me.
Whoops. Here is my screen. Matter of fact, I'm going to do something real quick. I'm going to go ahead and get, for those of you that just exited, I just took my dollar Mexican peso off the table. I picked up some down here at 54 and just sold it up here. I think it actually breaks out eventually, but I'm short dollar yen. So, I shorted this at 06. Just as it was sliding through here. But anyway, that's not what I wanted to talk about. What I really want to talk about is take a look at the bond market. Look at, well, you could look at yields. Look at yields. Holy mackerel. I mean, that just absolutely going in a free fall. Look at the Bund. Boon's at the 261% extension, almost 161% extension of the last 2016, 2018 range. Looks like a little blow off topish around here. Just if here, let me get rid of this really quick. If you go to the blog and you look, I guess it was probably about a week and a half ago. German Bunds, August 1st. It was exactly a week ago. So, the Bund is at risk of a blow off top. And we were, this is all free stuff, guys. It's on our website. It's, we were pretty far away from that 261% extension. Well, we're there today. We were down here, and man, that is damn scary looking. Look at the bond market. And so, I was sitting there talking with the guys in the office, and FX macro is like something just does not smell right. And I'm like, yeah, the bonds of the stock markets, something is fishy right now. And oh wow, the US dollar Mexican peso just broke. Damn it, I just got out of that damn thing. It's just at the 60 right now. Son of a biscuit. Oh, it's right at the 60 right now. So, but something wasn't just smelling right. You got stocks that are higher, stocks that were higher. All right. And we hadn't posted this false breakout here. Bonds were dumping, or yields are dumping. Bonds are ripping right now. And it's like, whoa, what's going on? Something's going to break. And right now we're starting to see stocks finally taking notice. The US dollar Japanese yen is getting close to these trend lows. I mean, we take out 105.50. We should probably trade down to 105.20. That's where my assumption is we're going to go. And with bonds doing what they're doing, yields doing what they're doing, that seems pretty likely to me. It seems pretty likely that we're going to be, moving that general direction. I'm probably going to take some profits down here just in case. You know, I just took a little bit off. Like I took a third off just now. Hold on. Try to let the rest ride out. Sorry, guys. Just doing a little bit of trading here. Uh-oh. Sorry, sorry, guys. I have to do a little bit of trading around here. Considering this is what I do for a living, I gotta do it. Okay, where was I? All right, so what was I saying? Oh, the bonds and equity. God, look at equities. We are just sliding fast and furious. Look at this is a 15-minute chart. Steve popped in on the webinar just before, well, just about a half an hour ago, right about here. He popped in the chat room and said, "Hey guys, I'm shorting the S&P." And that was just about the same time that I was actually shorting the dollar yen. And so Steve, great call there. I'm sure he'll be in here in a few minutes. But yeah, we're seeing some pretty big moves. And look at gold, Coach. We're past the 50% retracement.
Yep. So,
you know, some traders are asking me, you know, where we can go here in gold. I think it's this 1530 previous support from back here in 2011, right? It seems fairly logical here. Man, I really cannot believe this. I'm going to go ahead and just take my profits with the dollar yen just because it's too close to support to be short, and I don't mind. I don't mind being short. I just, you know, I'm trying to take profits when I can, especially when there's no, right now, other than stock selling off. It's like, okay, well, you know, is there an actual catalyst here that's driving it? Not necessarily. Hold on really quick. Sorry. There isn't really a catalyst that's driving it down here other than, you know, the market's trading heavy. The equity markets are trading heavy. But we'll see where we go from here. Like I said, my fear is that we've got kind of limited downside. Is that if we I took all my dollar yen off here, so we got the 161% extension. I don't necessarily want to be long, because a lot of people always ask me, well, Blake, if you're not going to stay short, why don't you just go ahead and get long? That's not, again, my bias is bearish, so therefore I want to trade it to the downside, and I look for rallies to sell into, not the other way around. So I'm not looking at to buy dips here. I think that the dollar yen's actually broken, and I believe that, you know, we're going to close the week, maybe not today, but we're going to close the week below this 106 level, and that's going to be bearish. You know, that's going to be bearish just overall. So, but man, this bond move is really scary. You look at yields, and here's the 10-year yield, here's the 30-year yield. I mean, just getting absolutely, you know, bonds are just ripping. And God, look at stocks. Yikes. Wow, man, it is ugly. And why? I don't know why, you know.
Good morning, Blake.
Yeah, good morning, Steve.
I think that really nothing changed since we got that really nice rebound yesterday, and we got some follow through earlier on the day today and during the Asian session. So I think that, you know, seeing the move from the bonds that you very rightly so stressed out, seeing gold and silver moving up, and nothing really fundamentally changed since the market sold off. I think that market participants are afraid that there is more downside coming. So in essence, I think that, you know, the S&P is trying to recouple with the move that we see in precious metals and bonds.
Yeah. I mean, probably, I guess. Overall, I want to be bearish equities. I was really looking for 2,900 personally. I was hoping for the 50% retracement, but as you guys hear me say this from time to time, is if there's a major hold on. When you're getting close to a really key resistance here, you're going to start to find sellers ahead of the levels, and that's one thing that that I think is happening here is everybody's looking to sell up here, and so as you get close to it, you're starting to find some sellers, and so and you have to be careful. As soon as equities open, I mean, S&P could. I mean, let's just take this intraday chart for example. We are making higher lows, higher highs, right? So what's to say, you had a little sell off here. Everybody goes, ooh, I'm going to buy it. And then we come to new highs. Then that's where I'm going to actually aggressively sell. It's going to be up here. Okay. That's what I'm going to be doing right here. That's going to be the trade for me. And whether or not we get it, I don't know if we're going to get it. I'm skeptical that that's going to happen, but I think it is possible. All right. So with that being said, let's go take a look at some of these majors really quick. So the euro, I had a bid to buy the euro down at 111.50. I was really hoping we'd get a little dip down here overnight, somewhere down here. I was going to try to get long on a dip. That hasn't happened. Well, there's been a little bit of confusion with why the euro is going higher, and I want to make sure that I explain this concept just a little bit. Is when you have a currency like the euro, or the yen is a good example of this too. Yeah, I guess it was a good idea that I covered up that yen. Those are funding currencies, and so when equities are rallying and we see the markets are really strong, a lot of institutions tend to take the funding currencies, sell them, like sell euros, and buy other things, whether it's they're going to buy equities, they're going to buy Netflix stock, they're going to buy crude oil, whatever the case may be. When you see a reversal of those flows, and you start to see equity markets come under pressure, those funding currencies get bought up again. You can see it in the yen, and a lot of it's coming into the euro. You're seeing the euro starting to firm up as well. I'm not going to sit here and tell you that Europe has the best, global economy going right now, but that doesn't necessarily mean that it's not going to move higher, or that the euro can't go higher. The euro can move higher as stocks move lower, at least near term. I think at some point, the dollar is going to the dollar is going to firm up if things get really ugly in the global equity markets. If things start to get super ugly, the dollar will be the safe haven currency of choice. But right now, we could continue to see the euro at least grind higher, as long as we're not down 50% in the S&Ps, which I'm exaggerating a little bit here. But the euro, it's one of the reasons why the euro has found a bid, and I'll be looking at the euro dollar to pick it up on dips near term. I still believe that the false breakdown below 111 last week was a big deal. So do I want to buy it here? No. Do I want to buy it on dips? Sure, I wouldn't mind picking it up on dips. Now, as far as the cable goes, the cable is just consolidating in this triangle. By the way, just keep that in mind. We push below that. Ooh, you got to be careful here, because if the euro does firm up and the cable firms up, we might actually get a move higher after this little false breakdown below this trend line. it's entirely possible. Just think about that for a moment. Okay, stocks look like they're stabilizing here. Again, I don't want to get too carried away with, you know, short dollar yen or you know, trading around risk, because what I'd like to see in the S&Ps is, like I said, we need to start trading lower lows. But with this move in fixed income, you know, you take a look at the bond market, you take a look at, you know, what yields are doing globally, not just the US, globally. You know, it does freak me out a little bit about equities, that's for sure. I just sold a little bit more euro pound when I was on this webinar. I'm still going to try to play this to the short side. I actually sold it on this spike up, and now looking at it, this is a 1 hour chart. This is a, just so you guys can see it. That roughly, you know, it's like a Garley pattern, roughly. So if we reverse here in the euro pound, that'd be good. I'd be happy about that, because I'm trying to play it against this longer term 127% extension, 161% extension of this move. Let me take this. But trying to play the cable on the long side has been really tough. So you can see that's 161% extension of this move, 127% extension of the whole big, whoops, I guess I should go over to a 4 hour chart. 127% extension of that move. So I'm trying to short the euro pound. It's definitely has been one of the more frustrating trades out there for me to try to employ. That's for sure. All right. Well, Steve, so let me talk to you for a few minutes.
Hey, Blaker.
So did you cover up your S&P short down there? Or are you going to just try to ride it short?
You know something? I'm not looking to be in longer term trades because I'm leaving on vacation next week again. So I'm going to be doing some shorter term trading this week whenever, you know, I see something jumping on me. So, you know, I moved my stop loss at break even. So I treat this like a free option. You know, if it works, great. If it doesn't, I lost nothing.
Got it. So you just put your stop loss at break even, and you're going to try to walk away from it.
At 28.85, yeah. And I'm going to see how the day is going to unfold. Now, you know, if it keeps moving in the right direction, great. At the end of the day, I will definitely take some off. If not, it's okay.
Got it. All right. Well, you know, I like the S&P on the short side, as you know. I'm just wondering if this is the right location. That's the only thing that
it might not be. I wouldn't be surprised if we see another leg higher before lower. But as I was saying yesterday during the webinar, I believe that the impulsive move that we saw lower the past few days, I doubted that we're going to bottom like this. So I'm more or less convinced that, you know, there is at least one more lower low coming. As you said, there's no guarantee that the move towards that low is the one beginning today. Absolutely no guarantee. So if this doesn't work, I'm going to make another attempt to be short at higher levels.
Yeah.
Towards 61.8.
Got it. So that and by the way, I agree with your analysis. And you know, the one thing that I always worry about for me is getting chopped up too bad. What I mean by that is, like, let's say, you know, I'm you know, I short the S&P here and I get stopped out, right? Then I, you know, hits the 50%. Then I try to short it there again and I get stopped out, you know, take a small loss. Then, you know, I get in the 618, try to short it there, and finally it starts to work in my favor. Unfortunately, my two stop losses that I've been stopped out previously have eaten up a lot of my profit potential anyway. And it takes me all the way back before I get all the way down here, before I start running in a profit over the last 3 trades that I've been in. And that does happen. Not you probably go, oh God, that's me. You know, I take 3 trades and finally one works out, and I end up breaking even on all 3 because I got stopped out on the first 2. And that does happen. And that's why you know, times like this, especially when there's more volatility, we're starting to get more volatility. So this is even a good time to be practicing more targeting, you know, targeting of levels specifically getting in where you want to get in.
Absolutely.
You
Entry
know,
levels are very important.
They really are. And the good news is the volatility tends to give you those entry levels, because you can have all these entries. You know, like you know, I'm gonna give you a common trade. People have been trying to short gold. I haven't figured out the reason why, because of this massive breakout that we've had.
Same here. I really don't understand why you would want to fade that. I can understand that it looks overdone in the short term, but as you've said multiple times, is that enough of a reason to short it? In my opinion, it isn't.
Right. So here's gold. 6-year consolidation breaks out. People start fading it. So you short it here. You know, you short it here, you short it here, you lose money, you short it again, you lose money, you short it again, you lose money. You know, let's say it finally makes it to 1530, you squeeze off a short, you get short, it drops all the way down to 1475, you make a killing in that one trade, but all of the losses that you took over the last couple of months have wiped out all your profits, and now you've just spent the last 2 months trading gold and you didn't make any money. You didn't lose any money. But how are you supposed to sustain as a trader when you do that?
And you had to go through all the stress, right?
Oh, God, yeah. You probably lost about 3 years of your life expectancy doing that too.
Yeah,
so, you know, you know, you have to be really careful with, especially once the volatility picks up and you see these big breakouts occur. I mean, these big breakouts are gargantuan. You know, a 6-year consolidation. I mean, come on. After 6 years and you consolidate and you break and then you hold it. Shoot, man.
Especially given the fact that the move in precious metals is very well justified from a fundamental perspective as well, seeing that the central banks are starting or are about to start going on a massive easing cycle once again. So it's not just that you have a technical event, is that you have a technical event which seems to be 100% justified by the fundamentals, right?
Right. Oh, yeah. In this case, yes. Yeah, but anyway, I'm just using gold as an example because it's been a very popular. I see it all the time. You know, people are always tweeting at me, "Oh, it's gonna fail up here. You know, I'm shorting, blah blah blah." And it's like, all right, you know, good luck, and God bless you. Yeah, you know, I hope you have a big trading account. Anyway, all right. Well, Steve, I'm gonna
cover on the short yen, Blake.
Thank you. I'm going to look to reestablish that a little bit later, especially if bonds continue to stay strong. And I know
trader intuition. That was very nice.
Yeah. Well, thank you. All right. Well, guys, I hope you have a great one. Steve, I'm going to pass it over to you. And you guys, we'll talk to you. We'll talk to you tomorrow.
Someday.
Thanks, guys.
Bye-bye, Blake.
Thanks. I'm here too.
Oh, happy birthday, Stelios. Damn it.
Oh my God, he's here.
Yeah.
Thank you.
He knew he'd get a happy birthday song.
That's why I came, actually.
Yeah.
We know that's all you came for here. Yes.
Okay, I'm out. See ya.
That's why you guys hired. Isn't that why you hired me, to just be the happy birthday?
Exactly.
All right. So I am here today, but we have to talk about the Airbnb a little bit. My internet connection is actually not very good again today. I don't know why. If I lag, just let me know.
So far, you've been lagging less than what you've been lagging the previous days. I can tell you that much, if it helps.
Okay. So we had the Airbnb yesterday, and remember yesterday here on Face, I said that the risk is always with the Airbnb to be dovish. And because, you know, I think them and the S&B are probably the two central banks who hate the currency more than others. And I said that the risk is for them to be dovish. Well, they cut 50 instead of 25, which, you know, if you look at it on numbers, it's probably not, probably wasn't warranted, but they're very forward-looking, and what they're doing is they're not looking at backward-looking indicators like, you know, inflation and employment. They're looking at forward looking indicators, and those are turning just like they've been turning in the US and in Europe, and they decided to get ahead of the curve and cut 50. And they cited global growth concerns, the trade uncertainties, all the stuff that really most central banks should be worried about. So they cut 50, and the market was caught by surprise because it was fully pricing in 25, but no more, from what I recall.
Conveniently, central banks don't seem to care about something that is even more important, though, which is debt.
No, because they keep producing more and more every year. So
yes,
they choose not to look at that. It's a big elephant in the room.
Indeed.
So that was the main event of yesterday, and as a result, the Kiwi has been underperforming, understandably so. We also had German industrial production, another big miss, minus 1.5% month on month. Was barely flat last month. So, again, more numbers that are not looking great for Germany. And so now I think we look at this, we look at what the RBNZ has done, we look at other central banks who are warning about future growth potential. And I think the Fed is taking paying very close attention to that. And what is it? I think we're pricing a 60-70% chance of another cut in September. I think the market is going to go ahead and price it fully before we get there. That's my hunch. And as we've always said, the bond markets always know better. That's what I say. And
Goldman, I think yesterday it was, said that they now expect 75 more base points cut within 2019.
Wow, really?
Yeah. Although to be fair, they were the same people that last November were expecting 4 rate hikes this year. So
yeah, it's funny, isn't it?
Because when they thought last November that we're going to get 4 rate hikes this year, I was almost rolling over the floor laughing, you know what I mean?
Yeah, I remember that. You were saying it. I remember it very clearly. So yeah, I think three cuts until the year end is probably aggressive, but I think that the market is going to go ahead and price fully at 25 in September, and then the Fed will have to deliver again. So
unless we get equities really plummeting until then, in which case I wouldn't be surprised. I wouldn't be very much surprised if we saw more than that. You know what I mean?
Yes, agreed.
Because we know that the first thing they care about is asset valuations. They never openly admit it, but that's what they care about.
Yes. And you know what? The U.S. Treasury market is screaming to us. I wrote this in the chat a little while ago. Global recession. That's what they're saying. And the more bond markets are usually ahead of the curve, and you're usually right. So I wouldn't dismiss this move at all. And I also think this is what the precious metals are doing. You know, gold broke out a few weeks ago, and we are looking now at global easing. More and more.
Silver is breaking today above also a very, very important descending trend line resistance. I'm going to show that soon after you're done.
Yeah. So, just the global picture is not looking very good, is it? So I think it's going to be hard to find any central bank who's not going to be easing. I know Norges Bank is due to or is expected to hike one more time this year. I don't think that's going to happen.
Yeah, that's what I want to say. I don't really think that they will have the guts to hike while everybody else is cutting as fast as they can.
Yeah.
Wouldn't make much sense. You never know, but wouldn't really make much sense.
Yeah, I don't think it's coming, but that's it. So you can take it away, and I can go to the beach.
Can we please switch roles? Do you want to wait? Me going to the beach?
Next week. You're off next week, so
that's true. So I can't complain.
And thank you everybody for the birthday wishes on the chat and on the comments. Thank you very much.
Happy birthday again, old man.
Thanks,
Enjoy.
Man. Thanks.
Okay, so we have quite a few comments, questions today. Many happy birthdays for sure. Let me see. Look at this damn CHF and JPY. When these two are strong, we have one directional unfair non-technical market. What does unfair non-technical market mean? I really don't understand what fair and unfair is, having to do with markets, but whatever. I mean, if you care to explain, I will be more than happy to hear your point of view, but why is, let's go to the JPY specifically, since you mentioned it, let's go to the yen. Why was this move from there to there a fair move, and this multi-year, more or less, consolidation so far unfair? I mean, we've been dripping lower. We still haven't retraced even a fraction of the huge up-moving USD yen, which was the yen weakening, significantly weakening. So I don't really understand, is there a direction of the market that is unfair and the direction of the market that is fair? I can tell you one thing for sure. If you're trading with having in mind what is fair and what is not fair, I don't think you're going to be doing very well, because it has nothing to do with being fair or not. I mean, you know, there is the right direction and the wrong direction of the market. Now, sometimes the market is not moving in the right direction, having to do with the main theme. But if you're asking me, as a risk asset, if it makes sense that Swiss and the yen are moving higher at the moment, it makes much sense, because we're getting every day closer and closer to the next global recession. This business cycle has already run longer than any other in the history, propped up almost solely by easy monetary policy, and lately in the US, since Trump came, also fiscal policy. And, you know, we are long overdue for a recession. We've already started seeing strong signs that we're slowly moving towards one. So if there is a fair direction in the market, in my opinion, it is for the yen and the Swiss to strengthen. Okay. Although, as I said, I really am not in favor of, designating one or the other side of the market as fair. It is what it is. The markets move up, the markets move down. They have reasons for doing so most of the time. And even when they don't really have reasons, over a longer period of time, you know, they align with reality. Gold going higher and fire. Yes, and we can begin by there. Actually, I have a lot of things I want to talk about. I'm not even sure where to start. Okay, let's start by having a look at the Aussie and the Kiwi pairs, because we had big overnight moves, but specifically, I want to focus on the Aussie Kiwi, because I do think that the Aussie Kiwi might have made a very significant move overnight. Anyhow, this is the Kiwi. Stelios already said that, you know, they got more than expected. We breached earlier today the previous low. You can see it here. That was a major, breakdown. We actually retested levels we hadn't seen since the beginning of 2016. So in essence, that was a 3.5-year-old low, at least, you know, on an intraday basis. Now, on a daily closing basis, so far, we are trying to hold this previous low and this horizontal support area at 164.20. So let's see how that's going to end up. But there is no doubt that despite the recent consolidation, once we had that breakdown from this ascending wedge, the path of least resistance was lower. We indicated that when we were breaking down before I left for vacation, and we've been moving lower, and I see a decent probability that we're going to be breaking below this low as well. You can see that the RSI is confirming, the daily RSI is at 25. These kind of readings you see in bear markets. Now, Aussie also spiked lower. That one had already breached its horizontal support area. It tagged the 161.8% extension of the last rebound to the pip at 66.77. And as you see, even more importantly here, in order for you to find a lower low in the Aussie Kiwi, you probably have to go to the weekly chart, simply because, you know, there is none visible here. So if we want to see what kind of a low that was, we have to go here to the weekly. I'm a little bit clumsy because I'm on my MacBook. I'm now at least using an extra monitor, but this magic mouse is horrible. Okay, so in order to find lower levels, we have to go back, guess what, during the financial crisis, right? You can see that. 2009 was the previous time that we had so low levels. Okay, so, you know, all those events are ringing some bells. So that means 10 plus year lows for the Aussie. You know, obviously that is very significant, that is confirming. But most importantly, I want us to have a look at what happened overnight with the Aussie Kiwi. So Aussie Kiwi spiked lower, you can see it here, spiked lower, you know, yesterday's candle spiked lower below the previous low. Just look at that. That was a spike yesterday, right? It was a spike. And then we closed almost unchanged. And look at the massive update today. So everybody that was trying to be long the Aussie Kiwi is probably out of the trade now, because, I mean, the vast majority of those would probably have placed their stop losses below this previous low here that we had in March, which was the yearly low. Okay, not only the yearly low, we have to go a lot back to find you know, equivalent levels. So Aussie Kiwi spiked lower than that, probably kicked off everybody from this trade, and look at the massive continuation higher today. So far, we're getting once again rejected from the 50 DMA and this channel of resistance, but it looks very likely to me that this time we're actually going to bridge this channel to the upside and continue higher for one more move to the upside. Okay, so I do think that it's probably worth buying dips towards like 1043, 1045. If you want to jump the gun, otherwise buying the breakout from this channel. I think it's quite a significant event, and usually when you see these kind of moves, then you should expect you know, a move to the opposite direction. Now, on the other hand, Aussie Yen and Aussie Kiwi, Aussie Yen almost made it to the spike low, almost. I wouldn't be surprised if we, you know, dip lower than that. I mean, they both look very bearish still. And Kiwi Yen had already surpassed the previous spike low. You can see it here. It even penetrated the 161.8% extension of the last rebound higher. So undoubtedly very bearish here as well. Of course, with daily RSI hitting, you know, teens, like 15, 18, you know, it's bound for some kind of a pullback at some point. So, you know, there's no real risk-reward ratio here. But I do think that if for some reason we see any rebound towards this previous low at 70.27, I think that should be a great shorting opportunity. So basically all of them look very bearish, and they keep on, you know, pushing to the downside. So one topic, one subject I wanted to cover was those. Now the other one is what's happening here with the USD CAD, and I'm going to go to the precious metals, don't worry about it. USD CAD is making an attempt today to surpass a nice confluence of resistances roughly at 133. We had been talking about the appealing levels that we were testing down here, roughly at 130, because it was a triple confluence of supports, most important of which was this multi-year ascending channels support. We then breached this descending wedge, and now we've been pushing higher very nicely. I expected that this rebound might make it to this confluence of resistances at 133. We have there the 50% fib of the last move lower. We have the 200 daily moving average. 133 is also a horizontal support resistance area. So I'm really curious to see what USD CAD is going to do from here, because if it actually breaks above and closes above this level as well, then it might be looking for a lot more upside than I initially thought. Look also at the RSI climbing, about to test now the 70 key area. Okay, so quite a nice move here from the USD CAD, and especially let's have a look at what's happening with crude. There it is. Especially with crude now having breached this head and shoulders formation. If you remember, I showed this saying that, you know, there is a bearish and a bullish case scenario. The bearish one gets triggered once we penetrate through this neckline. We've done so. So I think that crude looks good for more downside. Next area of support is this previous double bottom, roughly at 50.5, 50, 60, 50, 70, whatever it is. I don't really see any area of support until we get there. Okay, so 50, 70, I think is easily doable. Obviously, crude falling is going to help quite a lot both the USD CAD and the USD NOK do well. USD NOK seems to be consolidating. I said that if for any reason we see a pullback to 880, 882, that's going to be a nice buying opportunity. I see so far though like a 3-4 day consolidation near the highs. Something tells me that USD NOK might not even provide the opportunity to buy it again at 880, 882. Okay, not certain yet, but it looks like a decent possibility. Now, Blake mentioned before the USD MXN. USD MXN has also been performing very nicely to the upside. We know that it's inversely correlated, as with any funding currency pair. It's inversely correlated with risk. We know that. We've seen that happen in the past like a billion times. Now, two things to keep in mind here. 1992 is a confluence of resistances. So that's a key level to watch. And second thing to keep an eye on is the fact that despite this nice spike higher, what hasn't changed is the fact that USD MXN remains trapped in a 2.5-year-old symmetrical triangle. Okay, so in order for me to get really enthusiastic about something happening here, I definitely need to see a breakout from this triangle. It's a regular triangle, which means that its range is contracting every single day. So inevitably, you know, it's going to break out sooner rather than later. But, you know, the range is still decent in size, so potentially it can remain in it for even a few months more to come. Now, having to do with, I'm not going to focus much on the more popular currency pairs like the Euro USD or the cable. I can tell you one thing for sure, the cable really doesn't look healthy to me. I mean, so far this confluence of supports has proven enough to stall the downside, but so far today has been the 6th consecutive day that the market is working on a pin bar. Pin bars are notorious for their unreliability in predicting direction, but they are also consolidation / indecision candles. Okay, sometimes they can act like reversal candles found at the bottom of or at the top of a trend, but no, not when you find a sequence of them one after the other. That usually shows a consolidation that has a very big possibility of breaking in the direction of the trend. So personally, I still believe that the risk reward favors longs against the lows because we are very, very close. But I think there is a very decent chance that cable is not going to stop here. It's probably going to continue lower past 121. Okay, Euro USD looks somewhat better. The combination of the two tells me that I have no reason to believe. Here it is. I have no reason to believe that the euro pound has stopped. Okay. And an extra reason I have no reason to believe that is the fact that as gold did, as the bulls had done some time ago, as USD NOK had done some time ago, euro pound has broken above a very significant long-term descending corrective channel. Okay. So I understand the appeal of looking to short this. I was looking to be short this, and I was at some point short this. I got stopped out at break even while we were still testing this resistance, because it looked likely that we might see like a deeper pullback. But now that we've broken out, I think you're either with the trend until proven otherwise, or better stay out of its way. Okay, that's my personal point of view at least. Now, metals and bonds, as Blake said earlier, bonds, metals, bonds. So gold, unstoppable, right? It has now bridged through the 50% fib of this multi-year move lower, and in all honesty, I see no real resistance until 1533. 1500 is obviously a psychological level, there's no question about it. Always big round numbers, especially 1500, like it's a big round number. I mean, it's exactly between 1000 and 2000, it's exactly 100. I mean, might do the trick. We've seen psychological levels work before, but from a technical perspective and looking back on the chart, I don't really see, aside from the possible psychological effects of 1500, anything stopping the trend until 1533. So basically, I wouldn't be really trying to fade this in, for any reason, especially if you consider the fact, if you remember, I kept saying that this consolidation in silver looks like a bullish consolidation to me. Now, today we broke above that. At the same time, we had the strength to break above this descending trend line resistance. And, the next big technical level comes roughly at 17.5. There are resistances until then. We have a decent resistance at 17.25, but bottom line, quite a big technical event, and it looks likely that there is a lot more upside coming here as well. I would also find absolutely no reason why you would want to fade silver. In all actuality, buying earlier today, the breakout from there would have been a nice play from the breakout. Now, as Dale said, I worked 2 consecutive days that, in my opinion, both Monday and Tuesday, that, in my opinion, gold-silver ratio should be topping anywhere between where we were and like 91. So, scaling in would be a good idea. I already like the reaction lower from there. Not unlikely to see a more complex rebound. It's not going to be the first time. So there is still a probability that you're going to get yourself a better price to be short. Not a certainty, a probability to see something like that. But there is also a very decent chance that you already saw the high of this rebound. Okay, so two possible scenarios. One, we go directly lower from here. Second one, you're going to get a better price to be short. But in both cases, I think that the chances that we're going to see a higher high before seeing a lower low are very slim, at least in my personal opinion, right? I'm not Pythia, I'm not a magician, I'm not like reading the lips, but just from market experience and having spent tons and tons of hours in front of charts, that's what I believe. Now, I got a nice price today earlier in the SPX. The reason I did sell it was because we entered this horizontal support resistance area, but one reason should never be enough. Why did I jump the gun without even reaching the 50% fib? The answer is what I said earlier when we were discussing with Blake. The answer was that I saw the S&P having already overshot by a lot what the market was trying to tell us, having to do with the movement of precious metals and, most importantly, the bonds. So I thought that if we see a recouple of these divergence in this occasion under the current circumstances, that should probably be the S&P trying to do some catch up to the downside. So I shorted it at 85, at 28, 85. Got myself a nice price, and I'm going to stick with it and see how it moves in the rest of the day. I don't have any more risk on the table. if you were a ForexAnalytix member on the chat room, you could have caught that with me. Now, having to do with bonds, I really don't have anything to say about bonds, and there is a very simple reason I don't. It's because so far the move higher has been unstoppable. We already see treasuries overshooting this long-term ascending channel, currently testing the 78.6 of this move lower from the all-time highs to the 117.5 low that we had. Now, would I be buying them here? Absolutely not, right? I mean, there's no risk reward whatsoever. But would I be fading them here without seeing first some kind of a nice big daily reversal? No, I wouldn't. For the same reason, I didn't try or attempt to do something like that with the bond. I mean, I was looking for a continuation higher, tag the 161.8% fib, but did I short it there? Absolutely not. I wouldn't be doing something like that unless I saw that level create some kind of a big daily reversal candle, that a key reversal, an evening star formation, or something like that would tell me that, okay, nice. Now the market is giving you a second signal that this is a good area, to try to fade this. But look at this. I mean, bonds are unstoppable. I mean, they created a possible ascending wedge, and they've already overshot that by a decent margin. Now there are no levels to target. Now you just have like the round levels, 178, 178.5, 179, simply because we are at uncharted territory, all-time highs, right? And, it is what it is. So the bonds are, remain extremely well bid. We've now surpassed the $15 trillion mark of bonds that yield less than zero. Anybody that has any basic economic knowledge knows how dangerous that is, and it's that, how unnatural that is. And, it's a huge proof that everything you see out there is currently extremely, extremely distorted. This is a reality that cannot be sustained for much longer. Having said that, that shouldn't mean that you should start fighting what you see out there until you get a signal that it's actually really reversing. Okay. Anyhow, Coach, do I have more time? Let me see questions. US 10-year heading to zero within 2 months? I don't think so. I mean, yes, it's moving lower. It's moving lower fast. Do I think it's going to zero? Not at the moment. Bonds and gold ripping, CL dumping, correct. If Japan, Switzerland, and Germany can do sub-zero, why can't the US? I have a very simple answer for you, because you're comparing 3 countries that should not be compared to the US. Germany, for example, let's take them one by one. Let's take 2 of them together, actually, to begin with. Switzerland and Germany, their financial conditions, their economies are at much, much better shape than the US. Much better shape. Much better. When I say much, I mean much better shape. Just to give you an idea, if for some reason the Eurozone broke down tomorrow, I think that the German Bund would completely destroy the US dollar. Completely destroy. I mean, we would have a massive uptrend in what did I say? Did I say the Bund? It's German mark, I meant. I don't remember what I said. So, if we had the German mark solo outside, the euro, it would be in a massive uptrend. Okay. Switzerland, more or less the same. I mean, it's the safe haven of safe havens. Okay. And Japan might have its own issues, like, demographic issue and a huge debt, but there is a huge difference there. The vast majority of the Japanese debt is internal. They don't actually owe money to others. They owe money to themselves. Okay, that is why the massive Japanese debt doesn't really count. Also, the aforementioned economies have actually an economic model that works. The US doesn't. The US has spent the past few decades basing its growth mostly on consumers consuming more by being on credit. So if you're asking me, I would buy any of those three currencies, assuming that, you know, the German mark would exist, over the US dollar at any given day, especially the closer we get to a recession. Okay. Now, it's a different story if I would be buying other currencies against the US dollar. Obviously not, right? Because the US dollar is still the world reserve currency. So, you know, in comparison to other risky currencies and currencies that are much more correlated to what happens to global growth, then the US dollar can definitely overperform those during a bad phase of the global economy. Okay, so that doesn't mean I would be selling dollars, you know, across the board. No, not in any case. But since you mentioned those three specifically, now you have my answer. Let me see, the VIX. The VIX is on fire. Yeah, let's have a look at the VIX. We had a look at the VIX on Monday, but why not have a look at it again today? So far, the VIX is 12% higher on the day. And here it is. Keep in mind, as I was saying on Monday, 25, 26, quite a major resistance area. Don't forget that once again, we've broken out from another descending wedge. So the VIX so far looks like it can keep performing decently. Might be Hong Kong escalation. Yeah, things in Hong Kong are really not looking good. And, you know, I think there should be developments that are not good developments. I mean, I do think that the chance of further escalation is extremely high, unfortunately, for the people living there. Economic news today, not much, actually. What about risk management? I have no idea. I mean, when you ask the question, I have no idea what we were talking about. So, you know, if you can be more specific, please. What about the NASDAQ? USD NOK, we already had a look at it. I'm going to have a look at the NASDAQ. Need someone to take the other side of my gold long. Thanks, Blake. Happy birthday, still okay. Happy birthday, happy birthday. Aussie Kiwi. Yeah, I covered that. Silver, I covered that. Gold, I covered that. Perfect. What's your view on Bitcoin? Yeah, we can do that as well. USD INR, GBP CAD. Oh my God. Okay, Coach, do I have more time? Do you have an interview? Let's start from the NASDAQ. I guess he's going to tell me. So, NASDAQ found support on a daily closing basis on the 61.8. Earlier, it had spiked exactly on the 200 DMA. It's rolling over.
Steve, we're a couple minutes after.
So, you do have a guest here?
Yes.
Okay. Then I don't want to bleed into that. I'm going to cover the rest. Anyhow, NASDAQ, as you see, same deal with the S&P. You know, I would be looking for a rebound towards, probably if I was looking to short the NASDAQ, I would be looking for a rebound towards 7,600, but we never made it there. Anyhow, I decided to trade the S&P. So the rest of the questions, unfortunately, I'm going to have to go over tomorrow. So, Coach, enjoy the interview.
Thank you, Steve. Hi, Dominic James. Very nice to meet you. I'm going to make you promote you to a panelist, and then I'm going to mute you. And looking forward to meeting you. Appreciate you taking time out of a wild market day to be with us. And you're also going to be able to share your screen. You'll see a green box that says share.
Oh, yeah. Let's see.
Hi, Dominic.
Hi, Dale. How are you?
Good. Nice to meet you.
Can you hear me clear enough, eh?
I can. Are you calling from Australia?
No, I'm actually sitting in Saeed's apartment, Northern Ireland.
Oh, Saeed.
Yeah.
Oh, okay. All right, great. Well, real nice to meet you. Was he your mentor?
Oh, yeah. He's taught me a lot. I actually lived with him for a while, so.
Oh, you're having a reconciliation?
We always hang out, actually. It's like nearly every week.
Okay.
So
right.
I just sort of try and steal his ideas. That's about it. Look over his shoulder.
He's a generous guy, Saeed. I'm sure you don't have to steal. But God, you answered a lot of questions now that I know that who you collaborate with. How long have you been trading?
About 5 years, 5, 6 years.
Okay. And I was going to ask you, your mechanical, is that your own style? I went to your blog and I looked at some of your charts. Normally when I think of mechanical trading, there's no discretion. It's really kind of automatic. So am I getting it correctly that you're mechanical with a method, or the trading is mechanical?
Yeah, I would be mechanical with a method. I don't think I would be smart enough to go in every day and pick something out of the market. So I have a strategy that's completely mechanical. I need certain things to happen. Once they happen, then I go to the next level, and then the next level, and then it just takes the discretion out of it.
Okay. All right. So why don't we go ahead, and you have some charts up here. So tell us what you're seeing here. EuroCAD was really on a pretty good decline for a long time. That's a hell of a candle that we're looking at today.
Yeah.
This is a weekly candle.
Yeah, so I didn't really have much. This is just the chart that was up, but I was watching it from the weekly perspective. Once we started seeing this sort of wicky behavior down here, that put me on alert that to sort of get into thinking that I'm going to get my bias to go long. So once I get my bias from the weekly, monthly timeframes, then the mechanical strategies kick into place. So once I see from the higher timeframes what I want to see, then I put it down to the mechanical. So just this sort of wicky behavior down here. If you see this candle, feels to close below this one, and then this feels to close below the next one. So it's just telling me buyers are stepping in, and that's when I'm going to be looking for longs. It was sort of similar with Aussie New Zealand. I heard you talking about that. If I just take that chart.
Heck of a move both ways. They spiked it to new lows early in the week, and now we're getting a pretty nice weekly signal here.
Yeah, it's a sort of similar on the weekly. If I can just zoom in.
Do you, from what I recall, I think I've interviewed Saeed about 3-4 times. Are you in the camp of looking at quarterlies like he does?
No, I don't go that far. I wouldn't hold my trades that long. They'd be closed by Friday. So looking at really long-term charts, it doesn't, unless you're holding for months. I don't really see, it doesn't really line up with my sort of trading. It's the same with, I wouldn't really be into fundamentals or anything, so it's just technical based. I'm only trading until Friday anyway, so there's no point.
Would you consider like what 2-3 day guerrilla warrior type of trading is what you do?
Yeah, so I would let Monday unfold, see what Monday brings to the table. Then I'll be trading Tuesday, Wednesday, and Thursday, and then closing out by Friday close. Don't really have any take profits. I just let it run to Friday close.
Okay, well, we're getting some pretty good downdrafts in stock indexes, and metals are becoming almost a little bit parabolic. Any feel for what's happening there in equities and precious metals and the dollar itself?
I don't look at them, to be honest.
Okay.
Just stick to FX. So if you want me to go over a few dollar pairs, I probably could.
Okay, well, yeah, I mean, just whatever's on your radar, whatever you're considering, tell us how you would, like, for example, this Aussie Kiwi, to get long here,
yes.
is that a pretty big risk to risk the lows there, right? So how would you construct a trade here?
So if we look at the monthly, you can see this candle wick below and failed to close below. So that's telling me that buyers are stepping in. So once it gets below this second candle and around these lows, my bias would be long. Doesn't mean I'm going to get into a trade. I actually give out to members. Let me see. So I'll be looking at support and resistance on the lower time frame. So areas like this. Once we spike down, I was actually looking for something like that, which we didn't get because of the news. Yeah,
do you trade in front of red events like central banks from New Zealand, Australia, the Fed, the ECB?
Not really. If I'm in a trade, then I would leave it, but I wouldn't be entering a trade just going straight into it. So usually let it settle down, see what happens after that.
Okay.
I could go for some dollar pairs. I'm looking at dollar yen shorts. If we can just zoom in, you can understand me, okay? People,
Yes.
people
Yeah.
sometimes the
Yeah.
accent.
No problem with the accent. Yeah. Very, very clear. Okay.
So dollar yen. I think we're going to run these lows.
Okay.
A lot of stops resting under there, I think.
You think a lot of people have their stops under the flash crash low?
Yeah.
Okay. Not
I
that
think
far away.
not that far away. I would use probably Monday's low to get in. I talk about Mondays a lot, actually, because it's a nice little range to trade. I'll actually show you an example of what I mean, just based off Mondays. So if we look at Euro Aussie, break above Monday, go higher, especially in trending environments. Break above Monday, and we go higher. We've broke above Monday, acting as support and resistance. So it's a nice little range to trade, and that's why I let Mondays play out. Even with no bias, you know, it's still it's a nice little indicator. Is Monday. If we just zoom in, you can see usually Monday's higher low is going to be the higher low for the week. Break above, go higher. Then we get a little bit of consolidation. Then we use Monday's low, break below, retest, go lower. Monday's range, break below, go lower. So basically getting higher time frame bias and then sort of getting in and out of the market like that.
Okay.
If that makes sense.
Okay. So yeah, you're a big believer that Monday's range is going to give you an indication. Taking out Monday's highs and lows, you go with that direction.
Yeah, but not by itself. There needs to be some higher time frame.
What's important confluence for you?
Taking out major swing highs, swing lows, that wiki behavior on the monthly. So if we just go to any chart, if you take a major swing high, so I mean like something that's been in the market for quite a while, hasn't been traded to. So if you take this swing, once we get above, we get a reaction away from it. Swing high, once we get above, we get a reaction away. We always get reactions at these sort of pivotal levels that haven't been traded at in a while. So
yeah, how do you handle false breakouts? You know, I mean, when you get breakout over swing highs, swing lows, and there's limited follow through, and then it's back under that swing high or back above the swing low, because there's been a lot of throwovers out of wedges and et cetera, where the markets are, you know how mean Mr. Market is. They try and shake out as many people as possible before the move they're looking for occurs without them. So how do you handle that? Is that your contingency when you buy a breakout over a swing high that a close back underneath it would negate the trade?
Yeah, so I would rather look to sell. So I'd sort of be more inclined to be a reversal trader. So once I see a major swing high or swing low being broke, I'd automatically look to trade the other side of it. Doesn't mean I'm going in right away trading it. I would need breaking market structure, some sort of confirmation. We did get a trade on dollar Swissy last week. If you, I think I put it on the blog. So we have the swing high, we come up, and then I just look for lower time frames. Even if you look at Monday's range here, so once we spike up quickly, take out that swing high, get back below Monday, acts as support and resistance, and then just ride it to Friday close. So that's basically how I would look for it, although there is a few more little technical things to it. That's basically the gist of what I would look for. We do get a break in market structure also, so the swing that takes price up, break below that, and
Okay.
then you'd be golden to trade. And I caught a few trades like that. Dollar yen also similar pattern, swing high, going into support and resistance, go down into lower time frames. You can see a similar sort of pattern.
Okay.
Spike up, break below, and hold the Friday close. And you do get a lot of, you get a nice runners if you hold it to Friday close, because I trade mechanically. If you need to be letting the winners run.
Let me ask you this.
Yeah.
Are you just one of the communities, or maybe you co-host with Saeed in the chat room? You know, everyone's dream is to, when they first start trading, is to trade for a living,
Yeah.
right? Okay. So what do you tell people when they ask you this question? How much capital do I need to trade for a living?
I would ask them if they're profitable without any capital, and then think about it. The more money you have, the easier trading is, in my eyes.
Yeah.
You would need to be looking at, I feel, above 50K to be comfortable.
Okay. Yeah, it's a good number. And how long do you think it takes before people ballpark? Let's start with you. I want to know if you kind of have the answer that, you know, I've interviewed well over 1,000 traders. How long did it take you to make breakthroughs to where you could be consistent in the market? And we all go through periods where we're also consistently wrong for a while,
Yeah.
drawdown periods. So how long did it take you to where you feel like, you know, this is something I could do, and I could quit my day job?
Yeah, I still don't think I could do it. No,
Okay, that's great. That's a great answer.
no,
Okay.
it's just, I think you need to be learning every day. And if you think you've got trade nailed down, then
Yeah.
I think you're mistaken, because
Yeah.
I think you should be willing to learn every day.
Okay.
And every day is a learning day because it's more experience. But I would say it took me about a good 2 years
Okay.
to
That's it.
fully.
That's half the time of the average answer.
Yeah.
Yeah, I
So
mean, you know, why should it be less than an undergrad degree to
yeah,
be able to learn how to trade? Or, you know, say
yeah,
you're a carpenter or a plumber, electrician, everyone starts off as an apprentice, right?
yeah.
And I'm not talking about the Apprentice reality show, which is
Yeah.
transformed to something else here. But what do you think are a couple of the most important things you learned from your mentor, Saeed Zaman?
Well, I think that's why it only took me a few years, is because I was hanging out with him a lot. So you need to surround yourself with someone that's doing it, and surround yourself with people that's doing it. Main thing took away from him was probably just looking for confirmation in a trade. So not just trading a level blindly, because levels don't really mean anything. You know, it's just a line in a chart. It's just an idea, but you sort of need to see what you want to see at these levels.
Okay, what's confirmation to you? A candle closing, reversal candles? What gives you confirmation once a level has been tested?
So a simple break in market structure. If you look at dollar yen here, you know, we have higher highs and then we get this run up and then quick break below. That would be a break in market structure for me, especially at the key levels that I want to be trading at. And obviously, you know, a break in market structure doesn't look the same every time. So my suggestion would be, once you have your levels, just to mark down what happened at that level to make it turn and save it away and see if it happens again. Just, I would take loads of screenshots of what happened at that previous level, and you know it could happen again.
Okay. And what's the best way people could follow you and where you're at during the day? I know your Twitter handle is prowl_FX. Is that correct?
Yeah, just follow
Oh,
me
here
on
you
there.
are at prowl_FX. Why the handle prowl? Are you do you also at night prowl around in your neighborhood?
Looking
Huh?
on people's windows.
Are you a prowler, buddy? Or only in the markets?
No
Huh?
comment.
All
No
right,
comment.
Saeed. I'll ask Saeed when he's on. His
Yeah,
schedule, so.
he's just laughing here.
Saeed knows you never know what to expect from me. So
He comes with me.
all right. Well, you know, better to have a driver waiting for you, right? So,
You're right.
and anyway, Dominic, was a pleasure meeting you. I thank you for taking time out of the day. Good luck in these wild, volatile markets. And, you know, Saeed's excellent. You were fortunate. Let me just wrap it with one more thing.
Yeah.
Before you found Saeed, did you come across any other mentors that helped you, or how were you able to find Saeed? How did that work? Was it from maybe Michael at I Am Inner Circle Traders, or prior to Saeed, where were you when you were a lost trader?
So literally, it was just looking at YouTube videos and
Okay.
following people on Twitter, and then Saeed actually lives close to where I was, and we found out that we live quite close. So we became good friends, and then he introduced me to a few people maybe that he was looking at, but mainly it was Saeed that I learned
Okay.
off.
Okay. All right. Well, great meeting you, my trading warrior brother. I wish you continued success. You know, stick with it, and appreciate you hanging out with us today in face. So good luck in this wild environment, Dominic. It was great meeting you.
Cheers, you too, Dale. Thanks for having me on, and all the best. Thank you.
All right. Everyone, that's a wrap for us on Wednesday. I'll see everyone tomorrow. Remember, don't just count your pips, count your blessings. And tomorrow, I have Price Action Kim with us tomorrow. You're going to want to see her too. I'll see everyone in the chat room. Good hunting. Adios.